The NASDAQ, it's up this morning, and it's up over a half percentage point and breaking out. But this is lackluster trade on the NASDAQ. You can see that as we're limping higher here, we're forming topping tails. We're selling off the highs of each session, each one of these 4-hour bars. So it gives the impression to me that this is a dead cat bounce. I would be careful. Folks, that was a clip from yesterday's stock charts today. And the reason why I played it is because I have been doing these stock chart today videos for about 2 months now. And I have been warning over and over again, do not go chasing the bright green futures. It's because the thugs on Wall Street are trying to take up parking space in your head, trying to get you excited to go in and start buying stocks, only to sell into the pool of liquidity that you provide. We want to be smarter than that. So here we were yesterday morning with this dead cat bounce, and by early yesterday, we had given up the gains, and we closed lower on the day. At current, we are down we were worse on the session. We're down just shy of a 1/4 percentage point. So what we're looking for is a breakout or a breakdown. Now, the key to remember, or the saying to remember here, is that today's lows could be tomorrow's highs. What does that mean? It means that if we take out yesterday's lows, you may want to consider lightening up on your long positions because yesterday's price action wasn't the best. I mean, last night on Market Wrap, I went over with members about a dozen charts that just clearly showed that we had signs of weakness. Members, if you haven't watched that video, please go check it out and get caught up to speed because I think we're in for some rough sledding ahead. Let's take a look at the S&P 500. Very similar price action. In fact, we broke out. Remember on Thursday and Friday of last week, we had a cup with handle formation. I pointed that out, and we broke out on the 26th. Rallied, pulled back and retested. Good stuff, exactly what you want to see. Rallied again. The problem is this, is that we broke down yesterday, back down to within this handle. And if we break down to new session lows on the day, in all probability, we're going a lot lower. Now, we appear to be trying to hold 2640. That was support back here on the 26th. If it breaks, we're going lower, folks. So please be careful. The technicals are not setting up well for longs. For shorts, it's looking pretty good, and we are short the market. The Dow futures, a very similar setup here as to what we just saw. We had a cup with handle formation last week. We broke out here on the 27th, rallied, and now we have broken back down yet again. So we're trying to hold support here, but if it fails, if we break down below the lows of the 26th, we're going a lot lower. Now, the dollar is ripping this morning. We are trading at current above 92. We have a new weekly high. This is not going to help the multinationals. Why? It's because it causes our exports to be more expensive overseas. So what does this mean for commodities? It's not a good story. Let's take a look at oil. Oil is rolling over. We are in a bull flag formation. I'm not saying to short oil, but I certainly wouldn't go buying it right now either. We're trading down below the 20-period moving average on a 4-hour chart. We do have ever-tightening Bollinger Bands. So while I would love to buy oil, I would love to buy the energy sector, I simply can't right now. Not with the dollar ripping higher. Now, if the dollar pulls back and we break out above resistance, different story. Then it's game on to the long side for oil and oil services. Now, as for gold, we're down on the session. We're trading very close to the ever-critical 1,300 level. If we close down below 1,300 on gold, big problems. That's a psychological support level. As for silver, we're down on the session, very close to 3/4 percentage point. We are rallying back a bit here. But if the dollar continues to strengthen, it's going to be very difficult for the precious metals to rally. Bitcoin. Bitcoin is in a trading range. We are holding a lower band of support here. Now, we do have an uptrend going on here. However, we do have a lower high. So if you're dead set on buying Bitcoin, I would be okay with buying it here. I would use a stop right down below this last 4-hour bar, and that low was 89.05. I would add on a rally up and through resistance at, say, 93.05, and then add more if we break above 97.26. Now let's segue over to member stock chart requests. This is where I review the symbols that our members submit for me to review. The first chart up, First Solar Corp weekly chart. We have a bearish key reversal on the week. We broke out last week. At current, that breakout has failed. It's early in the week. We could rally back by Friday. If we do, well, then I just may be saying the shares are a buy. But as it stands right now, they're becoming closer and closer to a short. Remember that First Solar trades in tandem, daily chart, with oil. If oil breaks here on a stronger U.S. dollar, you could expect First Solar to break down as well. We saw a bearish key reversal on the day yesterday. Today, in all probability, the stochastics will trade down below 50. If they close down below that level, look out below. In all probability, we are going to break down further on First Solar. We have a double top on RSI and a lower low. Be careful here. These shares are weakening. Volume yesterday. We saw institutional distribution. Baidu, weekly chart. It's holding up well. For a stock that broke down below key support March the 26th, the week of March the 26th, it has bounced back. We're very close to resistance. On a weekly basis, we broke out last week on RSI. No breakout yet on price. Daily chart. We have RSI, which has paused a bit. We were down yesterday. No shock there. Rising Stokes. No breakout yet on price. So I wouldn't buy the shares until we broke out above 257.30. And I would not short them yet. Volume yesterday was high. So wait for the breakout on Baidu. Grubhub, weekly chart. Were this a market that was in an uptrend, I would say buy Grubhub. Great fundamentals, great company. And I would like to buy the shares. Unfortunately, with the market weakening up here a bit, our discipline tells us to avoid getting long of a lot of stocks. We are on a weekly basis within a triangle formation. Daily chart. I would be looking for a breakout above this upper band of resistance here on the daily chart. We are at current trading down below the 50-day moving average, which is not good. We have higher lows on Stokes, which is bullish. Possible double bottom setup on MACD. If the markets recover, Grubhub would be one of the stocks I would look to put on. But I need to have the stock market with the wind at my back, because if the markets break down, and especially if they break down below the February lows, you're going to see margin calls like you've never seen before. And this stock, meaning Grubhub, or your favorite stock with the best fundamentals, will succumb to the selling pressure, because traders have a tendency to keep their losers and sell their winners. CBIS, Cannabis Sciences, monthly chart. I really like this setup. We're in a multi-year consolidation. We are trading above the 50-period moving average on a monthly basis. We have higher lows getting put in on Stokes, but unfortunately, we have a lower high. So we're in a trading range. We're looking for a breakout here. Members, we're going to talk more about Cannabis Corp. I like these weed stocks. We're going to talk more about best of breed plays and some speculative plays, which CBIS is one. So let's talk about that tonight on Market Wrap. More to come on the weed stocks. Amazon. We're looking to put on a short position here. Why? It's because while we rallied last week and we even took out the prior high, we didn't close there. And if this market weakens up, I think that Amazon is susceptible, especially after earnings, susceptible to a sell-off. MACD looks like we have a false breakout. Looks like it's failing. Daily chart. Friday saw a hollow-filled candlestick. Very bearish. Yesterday, a new daily low. Now, to be fair to Amazon, we did break out last week. We also got a validation of the breakout on RSI. So it's not a short quite yet. But if we break down below key support,
and we have a breakout point failure or a bull trap, we'll be looking to put on a short position. General Electric, we had a dead cat bounce, a rally back. We rallied up and into resistance, the upper band of the declining downtrend channel, and we are now rolling back over again. Now, the Stokes look good. RSI looks good. We even broke out on RSI. The problem is this, is that weak stocks tend to get weaker, especially in a weak market. So while I wouldn't go shorting General Electric right now, I would if we closed down below last week's low of 1391. And I would add to that short on a break and a close below 12.73. Now, to be fair, Stokes appear poised to hook back up here, and we have a possible double bottom setup on RSI. So I wouldn't go shorting just yet. Wait for that break below 1391. And that's it for this morning, folks. Everybody have a profitable trading day. If you watch us on YouTube, follow me there. Click that bell, get notified of future videos. Leave a comment. I'll definitely get back to you. Give me a like. And if you watch us on Facebook, StockTwits, Twitter, Seeking Alpha, follow me there. And if you watch us on the website, enter your email address. We hate spam too. We'll send you out a couple of free trade tutorials. Plus, you'll get our weekly best stock charts every week, which comes out on Saturday. Again, everybody have a profitable trading day. Be well.